All right, earnings season. You know what it's like, right? It's this quarterly flood of numbers, press releases, and let's be honest, a ton of jargon. But if you look closely, underneath all that noise, there are these really powerful signals about where the economy is really headed. So today, that's what we're going to do. We're cutting through all the static to bring you the 5 biggest, most important trends that define the first quarter of 2025.
So here's the game plan. We're going to kick things off with the incredible AI gold rush and see how it's bumping up against the new reality of global trade. Then, we'll dive into how those two massive forces are creating this split-screen economy for all of us, for consumers. From there, we'll zoom right into a high-stakes battle raging in healthcare, before wrapping up with the playbook corporations are using to, well, survive in this pretty complicated world. Okay, let's dive right in. Our first trend. It's less of a trend and more like a rocket launch. I'm talking about the race to build the actual, physical foundation of the AI revolution.
And honestly, there's no better way to capture the sheer energy of this moment than this quote from NVIDIA CEO Jensen Huang. The demand for AI isn't just growing, it's accelerating. It's hitting a turbocharge. And that is forcing the biggest companies in the world to spend, and spend in a huge way.
And when I say spend big, the scale is just staggering. Just look at this number. $75 billion. That is Google's planned capital expenditure for this year. For 1 year. It's a colossal all-in bet on servers and data centers, all to power their AI ambitions.
Well, that kind of spending creates this massive ripple effect, right? When a giant like Google opens its wallet, a shockwave just blasts through the entire supply chain. And you can see it right here. Look at a company like Broadcom. Their revenue just surged 25% year over year. And it's pretty much all fueled by this insatiable demand for AI components.
And this is not just an isolated thing. This is a coordinated, sector-wide arms race. You've got Oracle building these absolutely massive GPU clusters. You've got Cisco blowing past its AI order targets way ahead of schedule. Then there's TSMC cranking up chip production because demand is so strong. And Meta? They're already seeing their AI tools used by nearly 1 billion people. Everyone is building, buying, and deploying at a furious pace.
But while the digital world of AI feels kind of boundless, the physical world is actually seeing new walls go up. And that brings us to our second big trend, this challenging new reality of global trade.
This quote here from the CEO of medical device giant Abbott, it's just so telling. The entire mindset has shifted. Companies aren't looking at tariffs as some temporary political thing anymore. Nope. They see them as a permanent feature of the business landscape that they have to manage for the long haul.
And this isn't just one industry's problem. This concern is absolutely everywhere. You can see it across all these different sectors. You've got JP Morgan noting its clients are shifting to a much shorter-term focus. GE Aerospace is building more conservatism into its financial guidance. Cisco is actively modeling how tariffs are going to impact them. This is a top-of-mind issue for basically everyone.
So the crucial point, the big takeaway here is this. Companies are fundamentally changing how they operate. You hear it from Eli Lilly's leadership, who said they decided years ago to move away from just pure efficiency and start building for resilience. It's not just about finding the lowest cost anymore. Now it's about security. It's about redundancy. And just like Abbott's CEO said, it's about getting your manufacturing as close as you possibly can to your customers.
Okay, so these massive global forces, all this AI innovation on one side, all this trade friction on the other, they're having a very real impact on household budgets. And that leads us straight to our third trend, a stark and growing divide in how we as consumers are behaving.
I mean, you really can't get a clearer snapshot of the U.S. economy than this statement from the CEO of McDonald's. It's not one story out there, it's two. High-income folks are still spending, but low-income consumers, they're pulling back sharply. And, as he pointed out, that pressure's now starting to creep up into middle-income families too.
And you can see this split so clearly in the data. On one side, you have Bank of America reporting that the account balances for their high-income clients are up a healthy 5%. But then on the other side, you hear executives from companies like McDonald's, all the way to PPG, talking about how low and middle-income families are really getting weighed down by the cumulative hit of inflation.
So let's drill down into one of the most dynamic sectors right now, healthcare. Because this is where all these forces, Innovation, global supply chains, consumer costs are all colliding in a huge battle for a multi-billion-dollar market. So the war for the obesity drug market is really playing out in 3 acts. Act 1, companies like Eli Lilly and Novo Nordisk create these absolute breakthrough medications. Act 2, they launch an all-out war for market share, for doctors, for patients. But Act 3, that's the trickiest. That's where they have to face the powerful gatekeepers, the pharmacy benefit managers, or PBMs, who ultimately decide which drugs get covered.
You can just feel the tension in this quote from Lilly's CEO. So a major PBM decided to exclusively cover their competitor's drug, and he's basically questioning a decision that limits choices for patients and for doctors. It's a really high-stakes chess match with billions and billions of dollars on the line.
And this number right here, this shows you just how incredibly high those stakes are. This is the year-over-year sales growth in Danish kroners for Novo Nordisk's obesity care division. 67%. That is an explosive, category-defining level of growth, and it explains exactly why the fight for every single prescription is so intense.
Okay, so we've seen a technology boom, rising trade walls, a divided consumer, and just fierce industry competition. So how are corporate leaders actually responding to all this? Well, that brings us to our final trend, the modern corporate survival playbook.
In this kind of environment, companies are basically spreading their bets. On one hand, you see massive share buybacks from names like Walmart and Exxon to get cash back to shareholders. You see dividend hikes from Oracle and Chevron. But at the same time, you see these huge investments in the future, like AbbVie's R&D spend and Google's CapEx, right alongside a super sharp focus on efficiency and cost controls at companies like SAP.
So the crucial point is this. When the big picture, the macro environment, is this uncertain, you have to focus inward. You double down on the operational efficiencies you can actually control. You invest in the core innovations that are going to secure your future, and you reward the shareholders who are sticking with you for the ride. It's a really pragmatic, resilient strategy for some very turbulent times.
And all of this leaves us with this final, really critical question. We are watching these powerful, often contradictory forces pull the global economy in completely different directions. You've got the boundless, deflationary promise of AI on one side and the constrained, inflationary pressure of trade friction on the other. How these two forces balance out, how they resolve themselves, that is going to be the story that defines our economy for years to come.